There are three important issues that we all are talking about today. What happened, where are we now, and where are we headed from this point on? Now, what happened with Lehman or Bear Stearns is a classic case of a highly levered financial institution going down under because of its risky investment. These institutions were working with 30-to-1 leverage ratio, and even a small decline in their asset value was sufficient to wipe out their equity. Now, once that has happened, especially because of the decline in the house prices and the drop in asset value in the mortgage market, obviously these financial institutions are hurting. What it means for us in the real economy is that the credit to the consumers and credit to the corporations are going to be difficult to come by, which in turn means that the growth in the economy is going to slow down. And that's a big concern for the regulators, for the markets, and for everyone. So the fundamental question now that we face is, where are we headed? What happened with Merrill and Bank of America is a good recipe going forward, where the standalone broker-dealer firms are getting merged with these large commercial banks. And these commercial banks have the benefit of large deposit base. They're more stable. Also, they have the expertise in handling these mortgage loans, in making sure that these risks are properly controlled. So I think that's a good step in the right direction. But one thing I want to note is that when Alan Greenspan talks about this being once in a 100-year kind of event, indeed it is a grim situation. But unlike 1930s, when we did not have host of these institutions like FDIC or Deposit Insurance Program, now we have these institutions in place, and therefore I don't think it's going to get as bad as the 1930 recession. It's bad, but I'm glad that Ben Bernanke is at the helm of affairs, because he's a great scholar of Great Depression, and perhaps he's the best person to do the job and fix the economy.